All right, let's start. So, welcome everyone. The agenda for today was to cover technical analysis, and why we are covering this is our app certainly uses it to decide the buy sell signals. We also use fundamental analysis, um, which certainly means that technical analysis is an important part of our analysis, which is used to generate signals. So we had a lot of requests from the users. If we can cover technical analysis in a lot more detail, we should do that. So if you look at the agenda for today, is just to give you a brief background about technical analysis, various theories which drives it, which are basically the building blocks, and also something which says that technical analysis holds good. And then doing a deep dive into patterns, which is continuation and reversal patterns. And then moving averages, which is a very simple indicator, but very useful and can be a good starting point. Then there are more complex indicators like momentum indicators, which can be used. There are other retracement and other indicators which we would cover probably in the subsequent sessions. So for this session we would cover this, and depending on the time left we will cover others. We can also cover candlesticks, um, and also try to build upon some of how we combine these technical analysis tools to generate signals, and how we can use it in various market conditions. So moving forward, just to give you a brief background of technical analysis, uh, if you look at it, a security or a stock, the analysis is basically divided into two parts. One is fundamental and the other is technical. Now, the fundamental is more around having a EIC approach, where represents economy, I represents industry, and C represents the company. So you look at these three factors fundamentally and then decide which one is a good stock to buy. Technical is more about looking at the time series. Time series is the stock price, how it has moved, how it has done over the period of time. Usually, if you look at the price, there are few important aspects to it. One is the open price, then there is a high price, which is the highest of the day, and then there is a low price, which is the lowest of the day, and then there is a close price of the day. Now, I'm talking as one day as a reference. It can be 5 minutes also, it can be 10 minutes, and it can be week also. So it depends upon what sort of trading you want to do. If it is short term, very, very short term, you are an intraday trader, you would look at 5 minutes graph, which means you would look at 5 minutes high, 5 minutes low, 5 minutes close, and 5 minutes open, right? So these four price points. Now, these price points have a lot of information within itself. Now, what it means is the any news which comes impact the stock price. Now, if the stock price is impacted by that, that means the stock price has that information imbibed into it. What does that mean is then it becomes a really good reflection about fundamentals, certainly, and also gives us some sort of way to look at it in a much more objective manner. So if we look at technical analysis, if I look at it very basically, it looks at identifying the trends. So there can be a forward trend, upward trend, downward trend, and then how you identify reversal to it. So you hold, the trend would hold till you find a reversal to it. Now the trend can be upward or downward. Identifying that is technical analysis, right? And Doe theory is the foundation of technical analysis. What it says is that market, it is a technical framework that predicts that market is an upward trend if one of its averages advances above a previous important high. That means uh, today's high is more than yesterday's high. It means it is in an upward trend, or I would rather say yesterday's low is lower than today's low, it's also sounding towards a positive upward trend. So I talked about how the pricing, how the information is all imbibed into the market price, and it is also good to understand that all this pricing information is imbibed into various indices. Not to go into deep, it is just about understanding the fundamentals, and then how the market moves. Then the Elliott wave theory comes into play. What it says is it's a method of technical analysis that looks at recurrent long-term price patterns, uh, which incorporates investor sentiments and psychology. While I'm using very tough and tricky words, what it means is the Elliott wave tells that the market moves in a wave-like form. If it moves three up and two down, and then three up and two down, it means it is in a positive trend. It can be the other way around, that it is two up and three down, and that kind of situation. Uh, the If it is an upward trend, the impulse wave defines the trend, and the reactive wave defines the consolidation part. So Elliott wave theory says that it's all in there. It will move into this model, and depending upon whatever range you take, um, you will always see this wave. If you are looking at a single day graph, you would see this wave in there. And if you're looking at a year graph, you would still see those waves. We will look at some real examples, which I will show, which have been worked in a spreadsheet, and can be had a look. But before moving there, let me just try to see if I can share the Excel. So if you look at it, this is if I look at it, this is Bajaj Auto or HCL, one of the, it is Bajaj Auto actually. So this is the price trend. And if you look at it, you can easily draw this Elliott waves, and you can draw a small Elliott waves here and then a bigger one. So if you can see, it is certainly saying that it's a positive, it's moving in the positive direction. Now, how you use it as a trading tool and time it, you have to combine it with other indicators. Any questions thus far? Before I move forward. All right. So if you look at this chart is actually highlighting some important things here. So any line represents a price on certain day. It has got an open price, a low price. So if I increase the size a little bit, for a certain day, it represents a low, a high, and the closing price. And that is where you would see the trend. And uh, I hope everybody is able to see. It's just showing that my internet is unstable, but I would just continue. Um, Moving to continuation and reversal pattern. So what does continuation and reversal pattern is to identify from these graphs if there is certain trend and how you can use it, right? So there are certain continuation trend and there are certain reversal trends. If you look at channel, that means the price is operates between a certain channel. You can use it as an indicator to buy and sell. So for instance, if you identify that this is a channel and the price is touching a high and a low, and then it is managing the trend, you enter on the low and exit on the high, and that gives you a short-term trading signal during the day, and that you can use. There are flags, there are wedges, triangles. If you look at it, this again is a channel. This triangle, and this is a very interesting one, where the price has been in certain range, but the highs were lowers, but the low was always the same. And at certain point, if it breaks this triangle, that means it is going into an upward trend, and this is an indicator to go into a buy. And that's when you will buy and you will be long. till you find another reversal to it. So this is an upward trend you have found, and then you find a reversal at this point in time when it starts going down. I would just have a look at few others. This is double bottom. I'm just telling you some of the reversals as well at the same time. So double bottom is something like saying you made two bottoms and always popped up. So once you make a bottom, you come up, you make another bottom and you come up. And once you break this line, that means you are now into a reversal. So it was a downward trend and you found a upward trend from here. Again, you see a double top here. Now this is double top is also a reversal indicator, which is more like saying the same thing. It is saying that you make the double twice and then you come back from there. So you actually use this line as soon as it breaches that and use it as a sell indicator. Head and shoulders is one which is quite an interesting one, very difficult to find, and that's why I have used certain graphs to find it. This is the shoulder, then head is a little higher, and then you have another shoulder which is lower. Now these two can be of different heights, but this does tell that once the base, once this base is hit and it goes above this point, it means it's a reversal indicator. So inverted head and shoulder is a positive trend indicator. That means in a downward trend you seek that now it is reversing. Wedge again is a indicator where the price remains in certain range, but the highs becomes lower, and then the lower becomes higher, and then it consolidates, and at certain point in time when it breaks, it goes into a upward trend, right? So wedge is a continuation indicator that it is maintaining its positive momentum and is going up before, unless so the general rule, and just to summarize to all of you, is if you use these patterns, the idea is to identify um, reversals and continuation at the same time. So if you have entered a stock, you would always seek that there is a continuation. And as soon as you see a reversal, you have to exit the stock. Similarly, if you're short a stock and you see it is going down, it is a continuation pattern, downward trend, and then as soon as it breaks that downward trend, you enter into a buy signal. You enter into a buy, right? So this is continuation and reversal. I'll just come back to the PPT and make sure that so we covered triangles, we covered rectangles, channels, wedges, flags, and pennants. So flags, I will just explain you. Maybe I couldn't find it in this one. Flag is more like a parallel. So it is a wedge shape, and if you have both of them parallel, and as soon as it breaks, it is also a positive indicator. So flag is a continuation pattern, so to say. If I look at the other one, which is pennants is also a continuation pattern, very much similar to a flag, but it's a particular shaped flag, right? So very much on the same lines. There can be some broadening patterns as well, which means that the lows are so the lows and the highs are expanding, and as soon as it breaks that zone, it is a reversal signal as well. So broadening pattern can be used as a reversal signal. I couldn't find one in this graph, but just to let you know, this is a triple top. Triple top is a reversal indicator. There can be a inverted triple top as well, which would be a it is a reversal indicator again, but it would then signify a positive move. If you see, this is a wedge pattern. I don't see, I got it very right, but this is how it is. So these are some of the continuation and the reversal patterns which you can look up. If we move on to the next, and these are the momentum indicators. So momentum indicators are some things saying about is there a positive trend or a negative trend, and that would represent the momentum of a stock. Let me know if you're able to see my screen. Uh, if you look at it, just zoomed in a little bit just to make you understand. This is the price of the stock, this blue line, and this is much more shaky, right, than the others. And then this red line is a 20-day moving average. Then there is a 50-day, 100-day, and 200-day moving indicator, moving average, right? So these moving average usually will intersect each other and also intersect the price, the actual price of the stock. Now, this can be used as an indicator to buy or sell, and we have used it in our technical analysis in IntelliInvest. So, if you are looking for a short-term swing trading, right, what you would do is you would look at uh, the stock price. So this is the longward trend, and as soon as the price becomes higher than this, you get into a long, and you keep it long till it follows, until you see a reversal, right? And this is the top where you see that it has actually gone into a negative trend. So you actually would have been long for this period. So this intersection of moving averages can be used as an indicator, and this is certainly signifying the positive trend in this case. You can observe this similar kind of scenario for a downward trend as well. And if you look at it, when the buy signals are generated and when the sell signals. So this is very interesting because then it tells you where to buy. As soon as our stock price goes above the moving average, depending upon the horizon, you decide to buy until it intersect again. So this is so you would have bought here and sold here had you got a 20-day horizon, let's say, so for swing trading. But if you were a long-term trader, you would have rather hold it out for a 50-day moving average and would have exited here actually. So it's important, it becomes important how you combine these moving averages to decide where to buy and where to sell. Quite an interesting one, but it's difficult to draw, but all this is already supported on IntelliInvest. So if you can go into moving averages and go into the signals, those would be signals would be generated based on this analysis. Going to the momentum indicators even further, and this is again all these calculations, but I would rather show you some of the graphs rather. So let's cover MACD. Uh, so we covered, just let me, give me a second. I will come back to the PPT again, just to make sure that you all are able to connect. So this is the problem with this Zoom, that I need to actually keep going back if I want to share multiple screens. Nevertheless, so we covered moving averages. MACD, it is moving average convergence divergence. This is a very good indicator. So if we don't go technically into deep into this, it is a 12-day moving average of the price. The moving average is an exponentially moving average, which means it gives more weight to the recent prices. And then a 26-day moving average. The difference between the two is an MACD. Now that number, which comes out of this difference, uh, can be then superimposed on the 9-day moving average to be able to see to generate signals for trading, right? So that is where I will go back to my. Uh, it is some option all to show and hide meeting. Okay, alt and show. Nevertheless, I will come back to this. So if you plot MACD, you would see that it goes, so there's a negative trend, and then there is a positive trend. So you would use it as a signal. We can cover it some in detail, but as far as as far as just to make you understand. So I just explained what MACD is. It is a short-term moving average, 12 days. Difference between the two. The difference is represented as a number, and once you look at those numbers, you are able to actually generate signals. This is already incorporated in IntelliInvest, so you can actually directly use it. The MACD is very much used between the long-term moving averages and the short-term moving averages. So you can use it from there. Actually, I could have shared the app itself and shown it over there. Maybe that becomes a better choice. But nevertheless, let's move forward. We move on to the another indicator, which is rate of change. So what it does is it compares the price of a stock with its 12-day backward price and sees the difference, and then that ratio is plotted. This is an indicator which is used. So if so these can be used as an indicator to generate the buy sell signal as well. We have Bollinger Bands as well. Now the Bollinger Bands, what it does is, so uh, so Bollinger Band is very much dependent on the volatility of the stock. So what we do is we calculate the standard deviation of the prices, and this can be the standard deviation is 20-day. So you can either use 1 sigma up or down. You can use 2 sigma up or down. Sigma is the representation of the volatility. Now, when do you use 2 sigma? You use 2 sigma when the volatility is very uh, is low, and then when the volatility gets high, you actually converge to a 1 sigma. Usually, the people think it the other way, but this is how it is. And then the Bollinger Band. So there is a moving average which is going on like this, and then you plot the Bollinger Band, which is 1 sigma up, 1 sigma down, and then this, if you look at it, it's quite an interesting one, because what happens is, you as soon as these two diverge, which means the volatility has increased and there is a downward trend as well, so which means it is going down very fast, and then there would be a consolidation, which means the volatility will reduce. But as soon as the volatility reduces, you then hold your breath, because the volatility is going to increase, and the direction becomes very important at that point in time. Is it going to go down? Is it going to go up? And then at this point, if you see, since the price is the Bollinger Band is touching the price on the upside, which means it's a positive indicator. That means you have to go long here. This point is where you go long, and then you remain long till it touches it as soon as it starts moving in between, and this is the indicator where you say you sell. So if you say this is a buy and this is a sell, and this is how you use the Bollinger Band, and this is exactly how we have used it in the IntelliInvest to generate the signals for you. And so this is a complex one to calculate, complex one to actually, if you see the spreadsheet itself, it is a complex calculation for the upper band, the lower band, and then deciding how the buy sell signal would come, right? So this is a very good indicator. The good thing is it is driven by volatility. So there are two aspects to it. One is volatility and the other is the trend. So you have to catch two things. One is that
Manish, sorry to interrupt, but we can't see the spreadsheet. The screen is stuck on your PPT page, that is MACD. MACD.
oh goodness, okay, that's not good. Let me share again.
Yes, now
Okay,
I can see
okay.
the
Yeah,
So
now
spreadsheet.
we can see. Now it is seen.
Okay, so sorry about it. So I think you might have missed the summary around Bollinger. I'll just go back a little bit, take 1 minute just to explain. So what I was saying was the volatility is high in this zone. It goes low, which means now it is moving in a certain range bound. It is range bound, I should say. Now at this point in time, when uh, when the if you see the price and the outer band of the Bollinger Band touches each other, this is the point when you recognize that the trend is upward and the trend is reversing. That means it is going from a low volatility to a high volatility zone, and that is when you should enter it. And also this can be used very effectively for derivatives as well, but I will not recommend as yet, but just for you to learn. And so you are going to remain long till it is touching the upper band, and then at certain point it gets disconnected with the upper band and it starts moving towards the center, and it touches the moving average at this point, and that is where we say you should have to go short. That means you bought here and you short here, and that is how you use the Bollinger Band, and that is exactly how we have used it in IntelliInvest. And you can leverage that to generate the trading signal. Couple of points to note again for Bollinger Band, it's an important one. um, so tops and or bottoms made outside the band are followed by tops and bottom inside the band, which is a reversal indicator. I just told you with an example actually. um, Prices moving outside the band or touching the band is a continuation pattern. So what we mean is it's a continuation pattern, and you have to remain it on the stock long till it is a continuation. As soon as it moves back in the other direction, you short it, and that is when you can time it even better. So as soon as you know the prices have diverged, and you would know this, so you would be sitting on this date and say, what has happened, right? Or it has moved out, right? Let me exit it today or tomorrow, right? And that is when you do. So you can use it the same way for daily trading as well, but you have to construct it on your own because we don't do that for you. And maybe not even maybe, but we are going to support it in our website when we build it. Moving to some of the other, I'm not sure whether you saw this MACD, momentum moving averages. I think these were visible, or these were also not visible when I was showing it.
No, it was not visible.
Okay. Okay. Hmm. So let me just give you a little bit of background with this moving average thing as well, as to when you decide to buy and sell. So if you look at it, this is the price, the blue one, right? And this is a much more volatile one. Then the moving average, the most volatile, if you see, the next is this one. This is a 20-day moving average. This is green one is a 50-day moving average, and this is the purple one is a 100-day moving average, and this light bluish, sky bluish, I don't know, maybe I'm colorblind, but this is the 200-day moving average. So if you look at it, and I'm just picking up one point, this is the point where the price hits the moving average from below and is moving upward, right? And this is the point when the buy signal is generated for you from a 20-day moving average and also a 50-day moving average around the same time, right? And that is where you go long. You would have quit if you were here, if you were looking at a 20-day, that is a swing trading kind of thing. And if you want to remain long for longer, you would have bought it again here, sold it here, bought it again here, and sold it here. This is what you have done here for a 20-day cycle. Had I been 50-day, I would have bought it here and sold it here. Had I been a even longer duration, I would have, let's say this one. And that is where the problem is. You have to combine the indicators. You can't live with one and just use it. So I would say if it is high volatility, use a short duration indicator. If it is low volatility, use a longer duration moving average. That is how you can use it. And I will come back to this also. Did you see this screen when I was showing it? It was the continuation and reversal patterns. Was this visible?
Yes.
Okay, this was visible. But this, and I think I covered Elliott as well. Trend lines. Trend line, I just go a little bit and just explain the little bit on the trend line. So if you really want to see a upward trend, what you have to join is the bottoms. And if you join the bottoms of and you see a trend, which means it is a continuation pattern, right? What it means is continuation pattern just reaffirms that you are sitting on a stock which is moving upward. You have to be there. As soon as you see this was a continuation which was pattern which was going on, and now there is a reversal pattern which is, let's say, this one. And reversal for this is you touch the draw a line touching the highs, and you draw this line and you say the intersection of this two line will tell you to exit this stock at this point in time. So this is how you use the trend lines to trade. For us, if you look at this, this is very interesting. If Although it is very easy to draw on a hindsight, but let's say you were sitting at somewhere here, right? Let's say I'm here and I'm trying to draw the trend line, and I'm just seeing this. This is, now I was here, right? And this trend line was going like this. So what I concluded was, if the price goes below this, I will exit. So had it gone down from here like this, I would have exited it here, but it continued there. So I would have actually exited at this point in time. So this is how you do the trend line. I'll just show you the this one as well. So the trend line is, when I say upward trend, is you draw a line touching the bottoms and see if there is a line you can draw. If you see this one, this is touching the highs, and you draw a line which is downward trending. So if you touch the highs and draw a line, it is a downward trend. If you touch the lows and draw upward, it is a upward trend. So this is how you use a trend. Elite Ways was much more. I will stop sharing. Go back. So if you look at, so we covered moving averages, MACD, average directional index we haven't covered. The calculation is much more complex for average directional index. We can cover it next time. uh, William percentage R. It's yes.
Excuse me.
Yeah, Neeraj.
The MACD was stuck actually.
Okay.
So if you can just run through that.
Okay. Moving average. Okay. Let me see. Uh, just to explain you, um, how does moving average MACD is calculated. So it is the difference between the 12-day moving average and a 26-day moving average. Now 12-day minus a 26-day. What does that mean is कि अभी near term में अगर अगर ये positive है, right? Positive है इसका मतलब यह है कि 12-day moving average बड़ा है, yet that means it is on an upward trend. So what I would say, you can use 0 as an indicator to enter, remain on it till it is positive, and exit it when it gets to back to 0 again. And that is which can be used. And if you look at some of these numbers, it will go down bottom as well, which is minus 62, which means the 12-day moving average is lower than the 26-day moving average. It is on a downward trend. If you draw this comes out something like this. And these points can be used as an indicator for generating the buy sell signal. So this is what we covered. And I think if you see the buy sell signal, and if you can easily have a look, you would see that you were making good money if you were just entering here and exiting here, entering here and probably exiting here, and sort of thing, right? That is something which you can have a look yourself. But this is a intensive exercise. I would like to give you as an homework to do it, and then we can always have a look. Coming to RSI, which is a relative strength index, what it does is it is it is a reverse. It is basically saying it is a reversal indicator. As soon as the strength of a stock goes very high, and what we say is you can short it. If you see in our IntelliInvest app, oscillator is a RSI indicator which we use, and I think we talked about it in the last session. You can use it as an overbought and an oversold indicator, and you can use it to. I'm just seeing if I have got a graph for it, but maybe in the other sheet. Uh, Give me 1 second again. This is not very optimal that you have to struggle with the sharing part. I was showing Bajaj Auto. Let me see if I can show the HCL Tech. And do we have RSI? Ah, yeah, we got RSI there. So let me show you.
Yes, the spreadsheet is visible.
Visible, right?
HCL Tech.
Okay,
Yes.
good. So if you look at it, what it does is it calculates a 40-day gain and 40-day loss, which is the sum of, if you see what is gain, which means the closing price was higher than the open price, right? And this is the gain. Loss is when the close was lower than the open. What you do is you sum it up for 14 days. And once you sum it up, you get a 14-day gain and a 14-day loss. Now, this two relative strength is the ratio of these two numbers. So RSI is actually gain divided by loss. It gives 2.3. And then RSI signal says 70, which means 70% is the, if you look at it, your oscillator will show a number 70 in there, which means it is in the overpriced zone. If you see it is coming down, coming down, coming down, at 29, it has been suggested to buy. What it meant was you should have bought it at a price of, let's say, 237 or so, right? And held it till it went to overbought zone, which was around this sell price, right? And the price was from 237 to 250 is what you would have gained. That is what I can say from this. So I hope it is clear, but this is very much clear in the app itself. So if I share it on this app, I'm not sure whether it's connected or not. It's disconnected. Maybe I can't show it right now. All right. So I explained moving averages, MACD, ADX. Probably I can explain a little bit, but maybe let's go into details maybe in the next session. William percentage R is it's a very basic indicator. I think it is just having calculating the highest highs for 14 days and the lowest low of 14 days. And a number William percentage R comes from that, which is a highest high minus today's close divided by highest high minus lowest low, and it is multiplied by minus 100 to generate a number. It is a very standard and it was used earlier, and I think it is not much relevant. ROC again is a very traditional indicator. I think RSI, Bollinger Band, ADX, MACDs are the one which are going on right now, and we covered all of them. So I think we have covered enough for today. I just wanted to, any questions? We'll come to questions, but I really wanted to have some sort of conclusion around this on whatever we have discussed today. So if you are using technical analysis for your trading, you don't need to speculate, right? So no guesswork. Only enter when you have a confirmation that the trend has actually reversed. So trend reversals, so you can use the patterns, you can use the moving averages, you can use MACD to see that the trend has reversed, and then only you enter. You protect your capital using stop losses. Never, if you're a short-term trader, this becomes even more important. Even for a long-term trader, I would say you still have stop losses. Protecting your capital is a must. So if the stock doesn't follow the trend you anticipated, better get out of it. Okay, as soon as you say you assumed that it would go up, the trend was positive, you entered, and it is just not holding up, right? So it is, and just come out of it. Your stop loss would help you there, but make sure that the stop losses are there. protect your capital. And the joke is Sudhir Agrawal has just joined, a little too late, but probably I will share this PPT, might be helpful. So die another day, which is like just keep your capital safe so that you can trade another day, right? That's very important. And also use combination of indicators as we discussed, right? So combination of indicator is like if you use ADX along with Bollinger, it gives you some different view altogether. And as soon as you combine it with oscillator, you tend to know the overbought and oversold thing as well. The thing is, if you just follow ADX, let's say, it is a trend indicator. Now the thing is, it will show reversal much later to a oscillator. So I would use ADX to enter and a oscillator to exit, depending upon it is a it is a it is a volatile market or not, right? So you have to use the combination of indicators to generate the right signals for you. Use bubble indicator quite well, because you have seen this all this while we were talking about trading was fine. Actually the market is going into a downward trend. It is consolidating now, and I think it is going to go down. Maybe after Trump's sorry, US elections, you never know. I think it is overpriced already. I just don't feel good about it. Only the medical stocks are doing well, and that too because of all this news around they getting the COVID vaccine and having made some connections with Russia and other medical providers. So this is how it is. I think we covered quite a lot, but there's still a lot left. Technical analysis is a very in-depth tool. I think we can probably go into more details on a specific one. So if we want to really talk about three indicators, we want to get into details itself would take 1 hour. So maybe ADX, MACD, Bollinger, we can cover, but we did that today. Maybe what is left of technical analysis is candlesticks. We haven't covered. We haven't covered the Fibonacci retracements, Fibonacci arc, Fibonacci fan. Um, we haven't covered. Uh, I think we didn't cover the RSI. RSI we covered, but not the calculation part. And then on balance volume indicator. I think I can tell you a little bit about on balance volume indicator. You might have heard of it, but the basic thing about it is volumes are a precursor of the price movement. So if the price is rising and the volume is going up, it means it is going into a longward positive trend, and that can be used as an indicator as well alongside others. You can use the advanced decline ratios. So how number of advances and number of declines, this I think is very much available in a lot of the portals. We can probably add it in ours as well, which is like a how many stocks did actually advance and how many actually declined. And you can use a moving average on top of that just to indicate when you want to go long or short. I think we could have covered a lot more on patterns. Patterns takes a lot longer because you have to draw it and you have to understand it. We covered it quickly, all the head and shoulders, inverted head and shoulders, triple top, double top, triangles, rectangles, channels, widgets, etc. We talked about Elliott wave. We talked about Doe theory, which is the foundation of technical analysis. And also we talked about that price has got all the information, and it is based on the assumption that our price, what is being quoted, has all the information within it. Any questions before we close it? Yeah, I think
Can
somebody.
we cover candlesticks next time?
Okay, so that's a fair one. Candlestick itself is a 1 day session, and I can try doing it. But I think we have promised fundamental session next time, and so we should schedule the candlestick the afterwards, and also we see how many people are interested in it, and then we can plan it. Neeraj, I think you were looking for this session quite a lot. What are your views? Anything? I think you joined in quite late.
Pretty late, and unfortunately missed out the initial 15%.
Okay.
But this was quite nice, and as I asked that, can we get a recording of this session? Is it possible?
Yes, we are recording this session, so we will share the recording with everybody. I think it will go on social media as well, so you can hear it out.
Okay. And the Excel sheet, do we, is there a way that we can make this Excel sheet, or does it, that's your own thing?
So yeah, so this Excel sheet I won't be able to share, but I think what we have done is we have had all this built into the IntelliInvest tool. So
Okay. Okay.
so it is all there, and while we might not be able to show a lot of things on the app itself because of the size and screens, we are building the website
Mhm,
also, a detailed one where you would be able to
mhm,
see a lot more,
mhm.
maybe even do some charting yourself.
Okay.
Yeah,
One quick thing, like as you mentioned that in the IntelliInvest application, like daily we have some recommendations in premium reports.
yeah,
Daily we have some recommendation in the premium reports,
yeah.
and we use ATX to enter the stocks and
Mm.
oscillator to exit. So, whatever is generated in the premium report, we add that to a watch list and enter and exit accordingly.
This you can do, but see, you it is as much science as much as art. While IntelliInvest, what there is no manual handling, it is all automated, right? It is algorithms which are running, right? So we are not touching those algorithms. We have built those algorithms, those are fine-tuned every now and then, but we don't touch them. So manual intervention is not there. So what happens is you can the science of IntelliInvest you can use, but your own art you can use to time it better, right? So exit you can time it better. What I'm saying is you can time your exit a lot better, uh, depending upon if you can combine it. You understand what I'm saying?
Right.
Yeah. All right. I think it was a really nice session. We are on the big end of it. Uh, what I would suggest
Okay,
is,
can I ask one more question?
sure, sure.
Can I ask a question regarding stop loss?
Yes, please.
Yeah. How do you suggest, keeping in view the candle, how do we time the stop loss, and what should be the strategy for keeping a stop loss?
Yeah, stop loss, what I would suggest is, and this is where you draw the trend line. So, if the so the idea behind putting a stop loss is to see. So there are various ways of doing it. I would suggest if you are charting, if you're using charts to do it, then you would be able to easily see what was the if it goes below the support line. So the support line is your stop loss. You understand what I'm saying? So you have a support line, and then you have already
Yes.
entered it, and then it is moving forward. The line is going up. So actually your stop loss is going up as well at the same time, right? So use that line as a stop loss. So once you enter.
And for charting, like for example, say if we are using a particular software like Zerodha, the
Yeah.
charting is just about okay.
Hmm.
Do you suggest that we use some other professional charting, application, or some website where charting is much more effective, and we can run some script, or we can run some various tools like the ones what you suggested?
Yeah. So I would suggest if you are an intraday trader, so you within the single day you actually enter and you exit the stock. I would suggest you have a professional charting tool with you, and you should have that for sure. And but if you are swing trader or you are a long term trader, you can do away without the charting tool. You can very much rely on IntelliInvest to do that part for you. What in the future, IntelliInvest would start supporting intraday charting as well, and then at that point in time we will let you know, so you can start using it. But that's for the day trader. I still suggest that they should have a good charting tool with them.
Can you suggest any of the charting tools that we can use?
A charting tool. See, we got some proprietary ones, but I haven't looked at it. I find some of the tools within this ICC Direct and Motilal Oswal are decent enough, which they provide to their premium customers. Um, Otherwise, then Interactive Broker and all that also have very good charting tools. Uh, but I would good question. I will have a look at for India perspective and see if I can suggest something.
Any charting tool would require some technical kind of knowledge. It won't be just simple, simple kind of thing like Excel. I mean, Excel is the simplest of the charting tool.
Yeah, agreed. Totally agree.
If you're looking for just the tool.
All right. I think we can end the session today. Please help with your ratings and votes. Thanks for joining, and let us know if you want to have additional sessions on technical analysis and others as well.
Yes, additional sessions will really be, wonderful and quite helpful.
Sure, we'll
If
we'll
we can
plan that.
yeah, we can repeat this one, and we can also have additional advanced ones. That will be really wonderful and a great learning experience. And thank you so much, for the session. It was truly in depth and really wonderful.
Thanks, Neeraj. Thanks a lot. Have a good day.